Hey traders, let's take this time to refine our trading plan. So I realized that when we have a proper and more precise trading plan, right, then we can have a sniper entry, which decreases our risk, right? Then we can also lower our stop loss. So our lot sizing can be higher and we won't be in a lot of drawdown. Right? So you can frame it based on this USD trade, which was pretty textbook for me. Right? So I'm gonna use this trade as an example. Right. So firstly, what is the narrative? So before we even enter for buys or sells, right, we have to ask ourselves, what happened to price on the higher time frame, right? So we want to catch big moves, right? In order to catch big moves, we have to go to higher time frames. So here on the weekly, there's a sweep, right? Buy side sweep, right? As you can see here. So right here, not really any price action except for this daily bullish rival gap, right? That conformed 24 hours. You can see that. Um, Price did a sharp turn to the upside, right? So this is a very sharp turn, and then it came up and created another very sharp turn. So yeah, so before Monday started, right, we should be looking for sell positions. So this is the narrative, right? So what is the narrative? So for instance, price sweeping. Um, so in this case, it would be price sweeping buy side liquidity on the daily time frame, or okay, and price creating a bearish sharp turn. Right, price created two bearish sharp turns. Okay, so next, are we looking for sells or buys? So in this case, it'll be buys. So in this case, we will only be looking for confirmations that supports our sell bias, okay, or bearish bias. Okay, so afterwards, okay, we can also identify this for our bullish order block, right? And also, sorry, okay, it's for our bullish order block. Yeah. Okay, sorry, and this, right? So on 4 hours, you can see there's a sharp turn. Okay, so I'm not gonna, label this, right? So you can see that on the 1 hour, price also kind of set liquidity, right? So even if it didn't sweep, right? But in this case, it's swept. Even if it didn't sweep, right, and it's lower, if this candle is lower, it is still reacting off this hourly bearish order block. So yeah, it doesn't have to be precise. Okay, so yeah, that's also under narrative. So price came up and then came down, giving us sharp turn, right? So yeah, we have our forward bearish parallel gap too, which can look for confirmations on 15-minute time frame. So next, price is near a point of interest, such as an order block or fair value gap. Okay, so mm, okay, before that, right? Okay, all these rules, right, are roughly. Okay, we don't have to follow them step by step. Okay, they can be jumbled out. Okay, so here you see that okay, for the next one here, it would be okay. For me, it'll be this mitigation of overseeing imbalances. So what's happening here is okay. So in fact, it is necessary. So what's happening here? Price give us a sharp turn, and during this sharp turn point, it is also reacting off this 4 hour bullish order block to pump price up to the 4 hour bearish order block. So as you can see, it comes from order block to order block, right? As it comes up, it forms this bearish order block, come down, break off this order block, come up to break off this order block, right? So price is jumping from order block to order block, right? With our mitigation of opposing imbalances. So yeah, and also on the low time frame, when we are about to enter, we also have to wait for the mitigation of opposing imbalances, right? So right now we are on the higher time frame, okay? So waiting for mitigation of opposing imbalances. So here you'll be right. So you can also see it as price retesting the forward bearish fair value gap. So price indicator the forward bullish or block up to the which is our main POI. Alternatively, you can simply see this as price retracing into our POI. So here price is near our POI. So in this case it'll be our you tap into the order block, right? But the main price action is in the fair value gap. So I'll say fair value gap. Price is near a point of interest on board fair value gap. Okay. So okay, you can group this together. Okay, but main thing is this. Okay, more importance on order block than fair value gap. Okay. Next is it is best for price to be inside of order block as that is where many of the liquidity sweeps or runs are. Invest money and the fair value gap can be distributed by you order block holders, then price is still holding structure. Yes, true. True. Okay. So this is a tip. Okay. Okay, next. Presence of liquidity sweep. So okay, here we see on the 4 hour time frame, right? Okay, let's hit down. 1 hour time frame. Mm, no opposing imbalances in here, right? This doesn't count because it is literally the forward bearish rebel gap, right? It's the fragments of the 1 hour time frame making up the forward. Okay, so anyways, 50 minutes. So our point here is to identify any presence of liquidity sweeps. So here you can see that high time frame there's a liquidity sweep. On the low time frame we also have to find sweeps. So you see high time frame we follow sweeps and price tapping to POI. This is considered medium time frame, right? Price tapping into POI and doing liquidity sweep. Then also when we enter our confirmations, then we also have to look for the same entry, the same entry model on the lower time frame. Yeah, so that's how it works. So presence of liquidity sweep, KS price. Okay, so you see on the 1 hour time frame, we have the 1 hour very short block. Okay, which actually price actually tap into. Right. So yeah, I will tell you the reason for this later. So anyways, price came down and there is liquidity, right? So as mentioned above, where does liquidity lie? Right, mainly the order block, right? Because that's where many sweeps or runs happen and where smart money enter. Okay, so you can see here is a liquidity. Here also above this hourly bearish order block. And as mentioned before, price doesn't have to sweep the top, right? You can just react off, okay, to collect all the orders, right, or to sweep all the orders. So yeah, okay. So normally when price comes here, people will have entered, then you put a stop loss like that, then they get taken out, right? So this is where the lower time frame matters. The lower time frame entry matters, right? So yeah, onto the 15. Okay, you can see that there's this fair value gaps here along the way, right? Right here, they'll be very distracting, right? So yeah, we have to be careful of such distractions, right? So you can see that price uh, respected this 15-minute bullish order block, came up came up to the extreme, right? Yeah, respected, came up to the extreme order block. Yeah. So as usual, when it came up to the extreme order block, it dumped all the way down. Yeah. So so you can see this will be the lower time frame retracement. When price created a sharp turn here, price came down to the order block. Okay. So this is another pretty good entry that we could have taken. So price bounced from order block to order block. Uh, from the sweep here, the lower time frame sweep, all the way to the extreme order block. So this would have been a 1:7. Yeah. So okay, but this will be counter trend trading, right? Because we're looking at the retracement upwards to this uh, main point of interest, right? So this is against our bias. Okay, but counter trend trades still can work out, right? If the certain conditions are met, right? So for me, there'll be a sharp turn and come down, and when it retraces, it should retrace to the order block, not just the fair value gap, but the order block. So stop loss can be tight. So just so in case we get taken out, right, then our share will be invalidated, right? Because you can see this this leg downwards, right? It's very hard to find a change of character, a bullish change of character. So we can only rely on the fact that it's a sharp turn, the fact that it's collecting sell side liquidity at the bottom, right? And when we retest, it gives us the best RR ratio, right? So eventually, price came up all the way to the extreme zone, right, where a lot of orders are resting and where there's liquidity lying around, right? So when real liquidity sweat, price will shoot all the way downwards, right? Yeah. So yeah, just a counter trend trade. Okay. So anyways, back to the normal trade on the 15 minutes time frame. Here we look for a presence of liquidity sweep. So yes, got. So this is really important, right? Presence of liquidity sweep, which is here. Okay. So see as price comes up here, you could have entered for sell positions. Okay, let's say we enter for shorts. Okay. Okay, let's say we enter for shorts here. Like this, right? So we will have to go to the 1 minute to see what price action gives us. Okay. So on the 1 minute, okay, what do we see? Okay, on the 1 minute, let's see on the 5 minutes. Okay, bearish, okay, bullish, fair value gap. Okay, so here you can see that in the 5 minutes we have this. Okay, so okay, if you were to look at the 1 minute, there'll be too much um, fair value gaps and order blocks already. Okay, a lot of fair value gaps, so it's hard to identify. Okay, yeah, or either ways, yeah, or either ways you can take short term trades also, right? And price broke below with a CISD. Right? When price broke below with a CISD, you can enter. Target the short term trend. Okay, yeah, that's one trick we could have taken also, right? So there's many multiple trades that we could have taken, right? So as price retest on the 5 minutes, okay, or let's see if we have anything to work with on the 15. Mm. Okay, on the 15-minute time frame, you can see that if we have entered here, price will only come down all the way here or to this extreme order block, right? Yeah. So as usual, if we see here, there isn't any mitigation of. Okay, let me see here. Yeah. Okay, we could have taken this trade. This trade is also good. Okay, but we are constantly mitigating. Um, we are constantly mitigating and collecting buy orders. Like for example here, price came down to mitigate opposing balance. Came up, came down. Same thing to mitigate opposing balances. Right here, right here. Okay. Yeah. So I guess when came up and came down, it did partial mitigation. That means when it came up and came down again, it did a full mitigation. Then as it comes up, it mitigates again. And when it came up for the final time, right, to take out, to, okay, after collecting all the buy orders and then collecting all the liquidity on top, then it dumped all the way down, right? So it did both things, right? So in order for them to generate liquidity, they have to take out a lot of orders collecting here, and also people putting their stop loss above, right? In order to generate liquidity to pump price all the way down, right? And as of right now, it's still going, and it's heading towards the daily bullish fair value gap that we have drawn out. Yeah. So this entire frame, okay, this entire Monday was the setup, and on Tuesday it determined how price reacted, right? So Tuesday to Thursday, that's how it reacted. It dumped all the way down, right? So I guess this is a setup that takes time to play out, right? Which means it'll be more rewarding, right? As you can see, right? Yeah. So yeah, that's how price action works. Mm, okay, so here we take a look. So as price comes up, okay, in 4 hours. Okay, let's see. As price comes up here, mm, as price comes up here, okay, is there any presence of liquidity sweep? No, because you only collect the orders, right? So not yet. Okay, so price has created liquidity. Mm, price has created a high inside of the as it got retested. Additionally, so additionally what happens? Additionally, So you can see here, observe if there's any low time frame liquidity at the price will most likely hit to that place. Just do not assume that when the fair value gets disrespected, it means price is going to go in the opposite direction. Order block can still hold. We can see the extent of retracement by looking at lower time frame point of interest overlaps. Main thing, this one. So this is the main thing. Okay, so here you can see the extent of overlap. So price is most likely going to hit to this order block. So this one remember extent of overlaps. Here also, this can be a point of extent of overlap. This low, cutting through this um, fair value gap, right? Because 15 minute, I guess it used to act as a support. Now it has turned into resistance, so it can be used as a sign of confirmation, right? And also on the 4 hours, yeah, on the 4 hours you can see that this candle is it's not long wick, it's a normal candle. So price can just retrace upwards. Right? So you can also look at the third candle to see how far price will retrace. Right? It depends on how bearish the third candle is. Sorry. In this case, it depends on how bullish the third candle is for it to retrace upwards, right? Yeah. And whether it has a long wick or not. So these are the methods, right? To use this or to use or to find like order blocks or breaker blocks inside of the imbalance, right? Yeah. So you can see an external retracement by looking at the lower time frame point of interest overlaps, which in this case is the yeah 1 hour bearish order block. Let's create a high inside of the 4 hour bearish order block. The fair value gap is going to be tested. Okay. Additionally, overlapping the 4 hour bearish has not been tested. Yep. It's been tested. So what's next? Wait for it to be tested. Okay. Thus, simply wait for the be tested. Okay, before it to be tested. So okay, it's been tested. So what now? We go to the 5 minutes to look for confirmations. Is it? So no, right? Actually, we are still in the 4 hour. So okay, 15 minute. We have swept. Okay, sorry. I take that back. In the 4 hours, we look for sweeps and all of this retracement and all those on the 15 minute. So after that, we look for any entries on the 1 or 5 minute. Okay. So after this sweep, what happened? Okay, we wait for it. Okay, here it's best we wait for a change of character. Right. So okay, let's see here. Okay, let's see. Okay, we created a bullish 30-minute time frame. We create a bullish uh, on the block. So you see, you achieve for price to come upwards. Yeah, and also we didn't create a CIST below this. Okay, yeah, intake. So as usual, it's constantly mitigating opposing imbalances, right? Like mitigation to the order block, mitigation to the order block, right? So it's mitigation to the order block, come up, mitigation to the order block, and as it comes up, right? Yeah, this will be the this will be a very small fair value gap. So you can see all the rest of the fair value gaps are significant, right? Except for this. So yeah. Mm, 30 minutes like this. Okay. So price, although it created sharp turn, it didn't matter, right? Because on 30 minutes, okay, On the 15th, yes, there's a bearish fair value gap, but price is just reacting off this um, high time frame, 30 minutes on the block, right? Yeah. So that's a bit too confusing, right? With the 30 minutes fair value gap orders. So just know that price after doing a sharp turn, very sharp turn, which is in our favor, will come up to the 15-minute bearish order block, which is what we want. But in this case, price pierced above it because he hasn't tested the 1 hour bearish order block, okay, which is what it did. So after that, after we come out to the 15-minute bearish POI, we go to 1 minute. So 1 minute, okay. Here we wait for a proper change of character and then a retest to where we try and make the retest to the order block, right? Which is here. And then indeed price came up all the way. And then after that, set so much liquidity at the top before coming down, right? Yeah, so here, let's update it for change of character. CSD on D, okay. Mini change of character, okay. 1 minute time frame. Okay, change of character must be above or below opposite on the block, which also means breakable of any high probability, yes. Because it became a breaker block, right? After it got body kind of closed. Yeah. Okay, let's do this first. We're running out of time. Okay, wait for creation of newly formed. Okay, which is what it did. Okay. Okay, observe there's a low time frame liquidity at the new. Okay, there isn't. Okay, price movement hit the price. Okay, so here I guess the change of character was the only overlap that we can find, right? So as price hits up, then we most likely can enter already, right? Or as usual, best is to the order block. Okay, yeah. Mm. Okay, so in this case, there's no liquidity. Okay, we can see. Okay, here also we can see whether price retrace. Okay, so the third candle here. Okay, the third candle here is a long week candle. Okay, so most likely it's gonna retrace because you see a lot of bullish momentum, right? It's a doji, right? Yeah, and wait for retest. How do you know retest is done? Should not form any opposing low time frame traffic gaps. But in this case, we're already in 1 minute. That's the lowest we can go, right? Yeah, and there's no opposing parallel gaps being formed. So yeah, that's good. Yeah, that's the trading plan. I see. Going on lower time frame to find entry model, right? Which is what we are doing. Okay, so that's the last one, and yeah, that's it.